Hey, good evening traders. Welcome to Monday the 7th of March market overview. Yeah, the appearance is slightly different today. I've been suffering a lot with headaches, so I'm trying out these new blue lens screen protectors. Apparently it protects your eyesight, helps with headaches and sleep patterns, so let's see how it goes. Will the euro reverse? This is something we sent out in our watch list to all our subscribing members. Will the euro reverse? Well, looking at this 5-year chart pattern, we have some very clear indications of where the market has respected in the past. Now you can see we wrote down, will the market basically come down and test the pandemic lows? Will this area be tested, or are we likely to see a key reversal off the trend line? Well, one thing I can tell you is that whenever markets have a significant move, they generally finish off with what I would call a large exhaustion candle. So they usually go into that resistance or that structure area, that support in this case, with a very, very strong sell-off, try and get all the breakout traders into the market, and then you'll see that basically it could be a double bottom, it could be a change of cycle, but it'll be just a dead cat bounce basically that's going to occur. And this is something we were looking at. The market literally has come straight into it. Now, I'm not saying that this is the reversal that's taking place, but if we drop down and have a look at a smaller time frame, the hourly, this is something that we called to our members this morning, which was the market gave us a little warning, which was this double bottom here. Then we saw a spike higher. Now, obviously sellers look like they pushed the market back down. But what we've had is we've had a change in cycle. We've created a new high and now we're creating a higher low. If we get through this area here, then this trend change is actually confirmed. Right now we just have a higher high and a higher low. Now as soon as that gets through there, we really do have a very strong ground that the euro is likely to continue its upward trajectory for a period of time. So one thing I will say is that whenever we're looking and the whole world is basically selling euro, there's things to take into account, which is sellers will eventually run out of steam, and it's usually when the rest of the market is getting involved in the market that is usually the case. So we've got technicals that are lining up for a potential euro long. We also have a little bit of fundamental analysis, which is the SNB. So the SNB being the Swiss National Bank, have already stated that this morning, in the early hours of the morning, that they are prepared to intervene should the market continue going against them. Now let's just take a look at Euro Swiss. This was a market that we bought today, and I will show you why we bought it today. So if we just go to the monthly chart, we're going to go right back to 2015. And this was January the 16th. This is when the peg was released. So the Euro Swiss used to be pegged at 1.2. And for those of you that are relatively new to trading, that meant that between the Swiss National Bank and the Euro, it was pegged at 1.2, meaning that in theory, the market value should never go below 1.2 and shouldn't really push too high. So that was where the market would gravitate to, around that price point. Now, the day that they released the peg, what happened was the Swiss franc gained significant strength. You saw the Euro Swiss drop about 1,600 points in a matter of minutes. And then it took a few months to basically meander its way back to 1.2. And then from that date, it's literally just been declining. Now what we find ourselves in is we find ourselves in this same territory where eventually that area was defended. And today, when we've seen the market come through this area and through the month of March, we've seen price breaking through this key area and testing parity today. The market tested parity and we sent out a nice little trade alert, which was this hourly candle here, broke and closed above this little structure. So we just bought on the break of it. Now, I did actually close the trade earlier because I think that we'll probably just get another correction. It's not something I just want to hold on to. Happy to take profit, but what I'll be looking for is maybe if the market can push back down into this structure here, and I'll look to trade long again. If not, then I'll look at using the structure that it's formed tomorrow, and I'll look for some day trades to trade this one. So this is another thing. So if the Swiss National Bank are going to basically intervene, in order for Euro Swiss to go up, that means they're going to have to buy euros and they're going to have to sell the Swiss franc. So things to look out for will be selling the Swiss franc against whichever market you see fit. Whether that's against the euro, then fair play. And if you want to buy the euros, then potentially this is going to be propping the market up when you're looking at other euro charts to trade. So another one that we were looking at based on indicator, which up here on the top right, this is what we call FX Tiger. FX Tiger is something that we've developed in-house, and it measures the strength and weakness of a particular currency on any given time frame. So if we just look at euro dollar right now, and I've changed the daily chart, what I want you to look at is what's the strongest currency and what's the weakest currency. So it'll pop up in this top right hand corner in about 5 seconds while it's just calculating the data, and we're looking for the top two and the bottom two, and what that highlights is they're the particular markets that so Aussie being the strongest, Kiwi being the second strongest, and pound being the second weakest, and euro being the weakest. So in theory, what you're looking at, if you were a trend trader, you're going to be looking at selling euros and buying Australian dollars, selling euros and buying Kiwi, selling pound and buying Aussie, selling pound and buying Kiwi. Now eventually that market will come to a point where it's likely to change trend, and what we're looking for is the extremes on both of these and the technicals to occur. So in this case we've got euro dollar, you can see dollar down at 3, technicals in place, euro being the weakest. This would be a nice start to potentially looking for that euro reversal, and as I highlighted earlier, we've got the technicals. Now we've also dropping down the time frame, we can see that boat, or that we can see it starting to change cyclical pattern. And you know, right now we want to see price get through that 109.40 area, and that's going to be a real nice confirmation. We'll look for that next higher low, and we can get long into that market. We can also see that this first higher low that's being formed for those aggressive traders in our members group, this rejected the 61.8 fib retracement level. So if you were to just come down to X, go all the way up to A, you'll see we've seen a rejection of the 61.8. So if you were trading like this, you'd be looking at entries off the 61.8, stops under structure, and then targets. You know, if you wanted the golden ratio 61.8 extension as a first target, I don't think that would be anything too out of the ordinary, you know, up at 1.102. And the reason I'm saying that is because this is an intraday time frame we're looking at, and if this is going to be the start of a reversal on the higher time frame, it should potentially go a lot higher than what we're talking about there. So massive potential risk to reward available. Another market to look at is Aussie dollar. Now this is something that has a lot of confluence. Let me just delete these trend lines that we've got in here right now. So I'm just going to zoom right out so you can look at the bigger picture. So something we highlighted, and we actually put these posts out on Instagram as well and in our free channel. So we've got 2 points of confluence. If we look at the first one here, the descending trend line, where we've got 1, 2, and we were forecasting a potential third touch, which has happened throughout the course of the opening of the market through Sunday and through Monday trading session. Then we've got the ascending counter trend line, which was this initial part here, which has got a rejection, price broke through, then it was using it as resistance, and again as resistance. So this area here is where we have 2 points of confluence, and now what we're looking for is a corrective move back into either structure or as low as 0.7. Now let's not get too carried away. We want to see how we can look to take some pips out of the market effectively. So if we drop down to the 4-hour chart, let's just have a look what's happening on this trend. Well, we can see it's very clearly on the bigger picture we're putting in some nice higher highs and higher lows, which are nice little stepping stones. But in the most recent trend, this bit here, the trend has been a lot more aggressive, a lot stronger. So we can see that the market is moving in a steeper channel, ascending channel, and then if we look at this here, we can see what's happened is with this strong sell-off, so we've got an internal ascending channel within basically a larger time frame structure. And now what we've seen is if we just zoom into that, we can see that the 4-hour chart has closed perfectly outside of this structure, which gives me confidence that the market, if anything, is going to pull back down. I would say at least to the monthly pivot, which is sitting in here at 7,200, but potentially back to where this last impulsive ascending channel started. So what I'm going to look for is, we've got a little bit of minor support here, but we've had that impulsive move, we've had the initial move now, so I want to see a corrective play coming in here, and it could be a rising wedge, it could be a flag pattern, it could be consolidation. Whatever corrective pattern I see form here, I'm then going to look to trade that impulsive move break down lower. So that's Aussie short, we're looking at Euro long. So in theory, if we're looking at Euro long, we're looking at potential Aussie short. That should make an explosive move higher for Euro Aussie long. So let's just take a look at Euro Aussie and we'll wrap it up there for the day. I know there's plenty more charts for us to look at, but that's where I'm going to stop for today. And then you'll have Nolan tomorrow evening running through some charts for you. So if we just go to the monthly and we just take a look at what's happened on Euro Aussie from a monthly perspective, well, you can see we've got key structure here that we've broken down, and let's just put this in. So a nice horizontal. We see price broken through this area here, and this price point of 154 area had been significant, not just recently but in the past. We can see multiple areas where this has been rejected all through here. So you've got 3 big tests there, a couple of tests there, and then we've had that big drop down. So what would we expect from this here, and can we trade it? Well, obviously the simple thing for the trend traders would be looking for a price to come back up into this area, look for a rejection, and then to trade it. But looking at that, that's best part of 400 points. So there's going to be opportunity to trade that long should price come back into that area. You can see the counter trend line that we got, and we saw some nice pips to take advantage from on that break there. You can see we also had our third test of structure right back up here. So there's been some lovely points to be taken out of Euro Aussie. Going back to the daily, you can see this market has just been in sheer meltdown. There's not been any corrective moves on the daily. So it's about time we're due one. But we need to have a set of rules in place that we can adhere to be able to trade it. Right now we're seeing a nice corrective move on the 4-hour chart, which for those trend traders we could be looking and start saying, right, well, maybe we're going to get that next impulsive move lower, which, you know, to be fair, that could happen. And if you're a trend trader, that's something you want to be looking at. You can see using moving averages right now, we're still quite a way away from that. So let's drop down to the hourly chart, see what we can see. Hourly chart, we've got a higher low, then we've had a move up into the 50 moving average, potentially to see the market pull back lower. So I think from where we currently sit here, trend traders can start to look for a change in cycle on smaller time frame to trade it back down into, say, around 147.90. So I would be saying those that are looking at this 200 moving average on the 15-minute chart, you can start looking for short opportunities, maybe back into this area here, which would align with Aussie USD having a little bit of a corrective move higher. But I'd be aggressive with your stop management and how you take profits off with this. And I'll be then looking for some sort of higher low to trade from to trade Euro Aussie long. This is my pick of charts: Euro long, Aussie dollar short, Euro Aussie long. So there'll be my 3 picks for this evening. See what you can do with those guys. Oh, actually, sorry, I was asked if I could have a look at Bitcoin. So let's have a look at Bitcoin. I did promise one of our members that I would fire this one out there for you this evening. So let's just go up to the daily chart. You can see I have been talking that I have been bearish Bitcoin. You can see we've got a short running. Let's just move that out of the way and explain why we've got a short running. And what we're potentially looking at. So Bitcoin is no longer the let's say the asset that would be running in the opposite or polar opposite direction to risk assets. Right now you're finding that crypto is running very much like risk assets. It doesn't appear to be what we used to see it as, which would be a safe haven territory. So things to look out at and adhere to would be, right, what's happening with on-chain analysis? What we're seeing from holders that hold Bitcoin, and are they in realized profit or are they in realized loss at the moment? And when you look at on-chain analysis, the people that are generally holding Bitcoin are sat in a non-realized loss at the minute. So the problem you have with something like that is the people that are holding Bitcoin, are they actually investors, and are they prepared to sit through the rough times and, let's say, add into that position through the bear markets? Or are they the type of people that will run and sell their position when they see the market drop? So not really investors, they're people that were trading it, got caught on the wrong side, and now they're basically suffering. So based on that, from a trading perspective, not an investment perspective, I am looking at this for short-term downside with a goal of 30,000. Now, yes, we did come into this area here at 34,000. We had some solid buys, took it right up to 44,000. But what I did stipulate is that while we remain below 45,000 without a solid close above, I'm going to be bearish Bitcoin. And if I'm bearish Bitcoin, that's going to have a knock-on impact on the rest of the crypto market, in my opinion. Therefore, on the back of that, I'm looking at shorting cryptos short term. If we get down into 30,000 and we do see that move, if it comes into here, I expect to see it have maybe a little bit of a deeper flush, try and trigger out any people that have got leveraged buy orders sat in here, wipe out, clear the market slate, clear all the order deck, and then we'll probably have that dead cat bounce, and I'll be looking for an opportunity to buy around 30,000. But what this should do is it should flush out the altcoin market as well. You should see a real catalyst of move pushing all the altcoins lower, and it could provide a brilliant buying opportunity for investors. Right now, as a trader, I'm looking to short it, but as an investor, I'm waiting for this opportunity down here. And also as an investor, if it doesn't get down here and we get it back above this area, then I'm happy to start acquiring positions again, to start looking to get long. So as it stands right now, short Bitcoin, looking for taking profits off initially at 36,000 just through these closes here. So we're not far away from that. We are risk free right now. Second take profits in and around 34,500, and then final extended profits just above 30,500. So that's it from me today. If you did enjoy our video, please make sure you hit the like button. So let's give it a thumbs up. Share the content with any fellow traders that you think might appreciate the information we've delivered tonight, and subscribe. So subscribe just means that next time we produce a video and we send it out, it's going to come straight to your inbox without you having to search for us. So guys, have a great evening. We look forward to seeing you with our latest update tomorrow night. Take care. Bye bye.